Question 1. Operational review demonstrates that the South Australian real estate market has experienced a period of significant growth over the past 2 years, but leading economic indicators suggest a potential slowdown or correction in the near future. As a licensed real estate agent in South Australia, how should you advise a client looking to sell their property in the current environment? Option A. Rely on anecdotal evidence from other agents and local rumors about upcoming developments to predict a continued boom, advising the client to hold off on selling until the market reaches its peak. Option B. Focus exclusively on the property's unique selling points and recent comparable sales, downplaying any potential market downturns to ensure the client feels confident about proceeding with the sale. Option C. Conduct a thorough analysis of current and projected South Australian market conditions, including economic forecasts and historical cycle data, to provide a balanced outlook and discuss potential risks and opportunities tailored to the client's specific situation. Option D. Emphasize the recent strong performance of the market and assure the client that prices are likely to continue rising, encouraging them to list their property immediately to capitalize on the current momentum. Correct answer is C. Conduct a thorough analysis of current and projected South Australian market conditions, including economic forecasts and historical cycle data, to provide a balanced outlook and discuss potential risks and opportunities tailored to the client's specific situation. Explanation. Scenario analysis. This scenario presents a professional challenge for a South Australian real estate agent due to the inherent volatility and cyclical nature of the property market. The agent must navigate potential downturns while advising clients, balancing their fiduciary duty with market realities. Misjudging trends or providing overly optimistic advice can lead to significant financial repercussions for clients and reputational damage for the agent, potentially breaching ethical obligations and South Australian consumer protection laws. Careful judgment is required to provide balanced, evidence-based advice. Correct approach analysis. The best professional practice involves a comprehensive assessment of current and projected market conditions, drawing on a range of data sources and acknowledging the inherent uncertainties. This approach prioritizes providing clients with a realistic outlook, supported by objective analysis of South Australian real estate cycles and trends. It involves discussing potential risks and opportunities, and tailoring advice to the client's specific circumstances and risk tolerance. This aligns with the agent's duty of care and the principles of fair trading under South Australian legislation, which mandates that agents act honestly and competently. Incorrect approaches analysis. Focusing solely on recent positive performance without considering broader economic indicators or historical cycles is a failure to conduct due diligence. This approach risks misleading clients about future market performance and could lead to poor investment decisions, violating the agent's obligation to act in the client's best interest. Adopting a purely speculative stance based on anecdotal evidence or unsubstantiated rumors ignores the need for objective, data-driven advice. This unprofessional conduct can lead to clients making decisions based on misinformation, potentially contravening consumer protection laws in South Australia that require transparency and accurate representation. Ignoring potential negative market shifts and solely promoting the property based on past successes fails to adequately inform the client of all material facts. This omission can be seen as a breach of the agent's duty to disclose relevant information, potentially leading to a misrepresentation of the property's value or future prospects under South Australian property law. Professional reasoning. Professionals should adopt a framework that prioritizes objective data analysis, client-centric advice, and risk disclosure. This involves 1. Market research. Continuously monitoring and analyzing South Australian real estate market data, including historical trends, economic indicators, and local development plans. 2. Risk assessment. Identifying and clearly communicating potential risks associated with market downturns or shifts to clients. 3. Client profiling. Understanding each client's financial situation, investment goals, and risk appetite. 4. Balanced advice. Providing a realistic assessment of market conditions, avoiding overly optimistic or pessimistic predictions, and presenting a range of potential outcomes. 5. Documentation. Maintaining thorough records of advice provided in client discussions to demonstrate due diligence and adherence to professional standards. Question 2. Process analysis reveals a real estate agent in South Australia is discussing listing agreements with a potential seller. The seller is keen to sell their property quickly, but is also concerned about the agent's commission. The agent has identified 3 potential listing agreement types that could be used. What is the most ethically sound and professionally responsible approach for the agent to take in advising the seller? Option A. Suggest an open listing agreement, highlighting that it carries the least financial risk for the seller as commission is only paid if the agent is the direct cause of the sale, without elaborating on the potential impact on marketing effort. Option B. Present the exclusive agency agreement as the default option, explaining that it offers a good balance between seller control and agent motivation, without fully detailing the circumstances under which the seller might be liable for commission if they find the buyer themselves. Option C. Fully explain the benefits and drawbacks of an exclusive right to sell, exclusive agency, and open listing agreement, detailing how commission is earned in each scenario, and then allow the seller to choose the agreement that best suits their needs and risk tolerance. Option D. Strongly recommend an exclusive right to sell agreement, emphasizing that it will ensure the agent dedicates maximum marketing effort to achieve the quickest sale, thereby securing the agent's commission. The correct answer is C. Fully explain the benefits and drawbacks of an exclusive right to sell, exclusive agency, and open listing agreement, detailing how commission is earned in each scenario, and then allow the seller to choose the agreement that best suits their needs and risk tolerance. Explanation. Scenario analysis. This scenario presents a professional challenge for a real estate agent in South Australia due to the inherent conflict between maximizing commission potential and upholding ethical obligations to a client. The agent must navigate the nuances of different listing agreements to ensure they are acting in the client's best interest, while also adhering to the principles of fair dealing and transparency mandated by South Australian property law and professional conduct guidelines. The pressure to secure a sale and earn a commission can create a temptation to steer clients towards agreements that benefit the agent more, even if they are not the most advantageous for the seller. Careful judgment is required to balance these competing interests. Correct approach analysis. The best professional practice in this situation is to clearly explain the implications of each listing agreement type, focusing on how each impacts the seller's potential costs and the agent's commission structure, and then allow the seller to make an informed decision based on their risk tolerance and desired level of agent commitment. This approach involves presenting the exclusive right to sell, exclusive agency, and open listing agreements with full transparency regarding the agent's entitlement to commission under each scenario. The agent should detail that under an exclusive right to sell, the agent earns a commission regardless of who introduces the buyer, which offers the seller the broadest marketing reach and agent dedication. Under an exclusive agency agreement, the agent earns a commission unless the seller finds the buyer themselves, offering a balance. An open listing means the agent only earns a commission if they are the procuring cause of the sale, which carries the least financial risk for the seller, but may result in less dedicated marketing effort from the agent. The agent must ensure the seller understands these distinctions and their potential financial outcomes, aligning with the ethical duty of disclosure and the principles of client-centric service. Incorrect approaches analysis. Recommending an exclusive right to sell agreement solely because it guarantees the agent a commission, without thoroughly explaining the seller's options and the implications of each, is ethically problematic. This prioritizes the agent's financial gain over the client's informed consent and potentially limits the seller's choices if they prefer a different arrangement. Similarly, pushing for an open listing without fully disclosing the potential for the agent to invest less marketing effort due to the commission structure, or failing to explain how the agent would prove they were the procuring cause, could mislead the seller about the level of service they can expect. Presenting the agreements in a biased manner, highlighting only the benefits to the agent or downplaying the risks to the seller, violates the duty of good faith and fair dealing required under South Australian real estate regulations. Professional reasoning. Professionals should adopt a client-first decision-making framework. This involves a thorough understanding of the available listing agreements and their legal and ethical implications within the South Australian context. The process should begin with actively listening to the client's needs and preferences. Subsequently, all relevant options should be presented neutrally, with a clear and comprehensive explanation of the advantages and disadvantages of each from the client's perspective. The agent's role is to educate and advise, empowering the client to make the decision that best suits their circumstances. Transparency regarding commission structures and marketing strategies associated with each agreement is paramount. Question 3. Stakeholder feedback indicates a homeowner in Adelaide, South Australia, believes their recently renovated family home is worth significantly more than recent sales of comparable properties suggest, citing sentimental value and the extent of their personal improvements. As a licensed real estate agent in South Australia, which valuation method would you primarily employ to provide an objective and defensible market appraisal? And why is this approach best suited to address the client's expectations within the local regulatory framework? Option A, cost approach, by estimating the cost to rebuild the property from scratch, accounting for depreciation to ascertain its replacement value. Option B, income approach, by calculating the potential rental income the property could generate and capitalizing that income to determine its investment value. Option C, a blended approach, giving equal weight to the comparative market analysis, income approach, and cost approach, regardless of the property type or local market conditions. Option D, comparative market analysis, by examining recent sales of similar properties in the immediate area and adjusting for differences in features, condition, and renovations to reflect current market demand. The correct answer is D, comparative market analysis, by examining recent sales of similar properties in the immediate area and adjusting for differences in features, condition, and renovations to reflect current market demand. Explanation: scenario analysis. This scenario presents a professional challenge for a South Australian real estate agent because the client's subjective perception of value, driven by emotional attachment and recent renovation, conflicts with objective market realities. The agent must navigate this discrepancy ethically and professionally, ensuring the valuation accurately reflects the property's market worth according to South Australian property law and industry best practices, rather than succumbing to client pressure for an inflated figure. This requires a robust understanding of valuation methodologies and the ability to communicate complex information clearly and persuasively. Correct approach analysis. The most appropriate approach in this situation is the comparative market analysis. This method involves examining recent sales of similar properties in the immediate vicinity of the subject property in South Australia. It considers factors such as location, size, condition, features, and recent renovations, adjusting for differences to arrive at an estimated market value. This approach is correct because it is directly aligned with the principles of fair market value as understood and applied within the South Australian property market, and it is a widely accepted and regulated method for property valuation by the South Australian Property Agents Act 1994 and its associated regulations. It provides an objective, data-driven estimate that reflects what a willing buyer would pay and a willing seller would accept in the current market. Incorrect approaches analysis, relying solely on the income approach, would be inappropriate and potentially misleading. While this method is useful for investment properties, it focuses on the potential income a property can generate, which is not the primary driver of value for a residential property, where the owner's emotional attachment and personal use are significant factors. It fails to account for the unique characteristics and market sentiment of owner-occupied homes in South Australia. Adopting only the cost approach would also be professionally unsound. This method estimates the cost to replace or reproduce the property, minus depreciation. While it can be a useful indicator for unique or newly constructed properties, it often overestimates the value of older properties or those with significant renovations that may not add equivalent market value. It does not directly reflect what buyers are willing to pay in the South Australian market for comparable existing properties. Professional reasoning. Professionals in South Australia must prioritize objective valuation methods that align with regulatory requirements and ethical obligations to clients and the market. The decision-making process should involve 1. Understanding the client's objectives and perceptions, but critically evaluating them against market data. 2. Selecting the most appropriate valuation methodology based on the property type and market conditions in South Australia. 3. Applying the chosen methodology rigorously and transparently. 4. Communicating the valuation findings and the rationale behind them to the client clearly, managing expectations and explaining the limitations of each approach. 5. Adhering strictly to the South Australian Property Agents Act 1994 and any relevant professional body guidelines. Question 4. The risk matrix shows a moderate likelihood of a downturn in the South Australian residential property market over the next 2 years. Considering this, which approach to real estate investment analysis in Adelaide would best serve a client seeking a balanced portfolio, adhering to South Australian regulations and professional ethics? Option A. Base the recommendation primarily on recent sales data and anecdotal market sentiment, assuming the current upward trend will continue despite the risk matrix indicating a potential downturn. Option B. Focus on speculative investments in emerging suburbs that are generating significant buzz, without conducting in-depth financial projections or property-specific risk assessments. Option C. Conduct a thorough due diligence process encompassing independent valuations, review of all contractual disclosures under the Land and Business, Sale and Conveyancing Act 1994, SA, assessment of local planning policies, and consideration of the client's specific risk tolerance and investment objectives. Option D. Prioritize investments in properties with the highest potential for rapid capital appreciation, even if it involves overlooking potential environmental concerns or zoning restrictions under the Development Act 1993, SA. The correct answer is C. Conduct a thorough due diligence process encompassing independent valuations, review of all contractual disclosures under the Land and Business, Sale and Conveyancing Act 1994, SA, assessment of local planning policies, and consideration of the client's specific risk tolerance and investment objectives. Explanation. Scenario analysis. This scenario presents a professional challenge for a real estate investment analyst in South Australia due to the inherent uncertainties in property markets and the need to balance potential returns with significant risks. The challenge lies in making a sound investment recommendation based on incomplete information and subjective interpretations of market sentiment, while adhering to the ethical obligations and regulatory requirements of the South Australian property sector. Careful judgment is required to avoid misleading clients or making decisions that could lead to financial detriment. Correct approach analysis. The best professional practice involves a comprehensive due diligence process that integrates quantitative analysis with qualitative market insights, all within the framework of South Australian property law and ethical conduct. This approach prioritizes a thorough investigation of the property's physical condition, legal standing, and market comparables, alongside an assessment of broader economic and demographic trends impacting the Adelaide metropolitan area. It necessitates obtaining independent valuations, reviewing all relevant contracts and disclosures under the Land and Business, Sale and Conveyancing Act 1994, SA, and considering the potential impact of local planning policies and infrastructure developments. The analyst must also consider the client's specific risk tolerance and investment objectives, ensuring transparency about all identified risks and potential rewards. This aligns with the ethical duty of care and the requirement to act in the best interests of the client, as expected under professional standards and South Australian consumer protection laws. Incorrect approaches analysis, relying solely on anecdotal evidence and recent sales data without deeper investigation, is professionally unacceptable. This approach fails to account for the specific characteristics of the subject property, potential hidden defects, or the broader economic factors influencing the South Australian market. It risks making a recommendation based on a potentially skewed or incomplete picture, violating the duty of care and potentially leading to misrepresentation. Adopting a strategy that prioritizes short-term gains by overlooking potential long-term liabilities or regulatory compliance issues is also a failure. For instance, ignoring the implications of the Development Act 1993, SA, or failing to conduct necessary environmental checks could expose the investor to significant future costs and legal complications. This demonstrates a lack of diligence and a disregard for the client's long-term financial well-being. Making a decision based purely on the perceived buzz or speculative interest in a particular suburb, without rigorous analysis of underlying fundamentals, is speculative and unprofessional. This approach neglects the essential requirement to provide informed advice grounded in objective data and market realities, potentially leading to an investment in an overvalued asset or a property with poor future prospects. Professional reasoning. Professionals should employ a structured decision-making framework that begins with clearly defining the client's investment objectives and risk profile. This is followed by a thorough data gathering phase, encompassing both quantitative metrics, market data, financial projections, and qualitative factors, market sentiment, regulatory environment, property-specific due diligence. A critical evaluation of all gathered information, identifying potential risks and opportunities, is then undertaken. Finally, a recommendation is formulated, clearly articulating the rationale, associated risks, and potential outcomes, ensuring full transparency with the client. This systematic approach, grounded in regulatory compliance and ethical principles, ensures that investment decisions are well-informed and aligned with the client's best interests. Question 5. Governance review demonstrates a real estate agent in South Australia is marketing a property that has historically been used as a small family farm, including a dwelling and several outbuildings. The agent is aware that the local council has recently rezoned the area to allow for light industrial development, and the property is now zoned for mixed use, permitting both agricultural and light industrial activities. The agent is considering how to best classify and market this property. Which of the following approaches best reflects professional conduct and regulatory compliance in South Australia? Option A. Classify the property as purely residential, as it includes a dwelling, and assume buyers will understand any other potential uses. Option B. Classify the property based on the most lucrative potential use, regardless of its current zoning or historical context, to attract the widest range of buyers. Option C. Market the property solely as a light industrial development opportunity, as this is the most recent zoning change and potentially offers higher returns. Option D. Classify the property based on its predominant historical use as a farm, while also noting its potential for light industrial development in the marketing materials. The correct answer is D. Classify the property based on its predominant historical use as a farm, while also noting its potential for light industrial development in the marketing materials. Explanation. Scenario analysis. This scenario presents a professional challenge due to the potential for misclassification of real estate, which can lead to significant legal, financial, and regulatory consequences in South Australia. Agents must exercise careful judgment to accurately identify the primary purpose and characteristics of a property to ensure compliance with the relevant legislation and ethical obligations. Misidentifying a property's type can result in incorrect marketing, inappropriate advice to clients, and potential breaches of the Residential Tenancies Act 1995 SA, or other applicable laws. Correct approach analysis. The best professional practice involves a thorough assessment of the property's current use, zoning regulations, and intended purpose, considering the South Australian context. This approach prioritizes understanding the predominant characteristics and legal classification of the property. For instance, a property primarily used for residential dwelling by individuals or families falls under residential real estate. If it is zoned and primarily used for business operations, it is commercial. Properties used for manufacturing or storage are industrial, and those used for primary production are agricultural. This detailed examination ensures that the agent adheres to the specific disclosure requirements and marketing standards applicable to that property type in South Australia, thereby upholding their duty of care and regulatory obligations. Incorrect approaches analysis. One incorrect approach is to rely solely on the vendor's stated intention or a superficial understanding of the property's appearance. This fails to account for zoning laws, council regulations, or the actual, legally recognized use of the land in South Australia. For example, a property that looks like a house, but is zoned for commercial use, cannot be marketed and sold as purely residential, without acknowledging its commercial potential and associated regulations. This can mislead buyers and violate advertising standards. Another incorrect approach is to assume that a property can be classified into multiple categories simultaneously, without clearly identifying its primary classification for marketing and legal purposes. While some properties may have mixed-use elements, for regulatory and transactional clarity in South Australia, primary classification is usually required for initial marketing and legal documentation. Failing to establish this primary classification can lead to confusion and noncompliance with specific legislation governing each property type. A further incorrect approach is to ignore the specific South Australian legislative framework governing different property types and instead apply generic real estate classifications. South Australia has specific laws, such as the Residential Tenancies Act 1995, SA, for residential properties and distinct planning and development controls for commercial, industrial, and agricultural land. A failure to consider these specific South Australian regulations can lead to significant legal repercussions and ethical breaches. Professional reasoning. Professionals should adopt a systematic decision-making framework. This begins with a comprehensive review of the property's physical characteristics, its current use, and critically, its zoning and planning status as determined by the relevant South Australian Local Council. This information should then be cross-referenced with the definitions and regulations pertaining to residential, commercial, industrial, and agricultural properties under South Australian law. If there is any ambiguity, seeking clarification from the local council or legal counsel specializing in South Australian property law is paramount. The agent's primary responsibility is to provide accurate and compliant information to all parties involved in the transaction. Question 6. The assessment process reveals that two unrelated individuals in South Australia are purchasing a residential property together. They have contributed equally to the deposit and intend to share the ongoing costs of the property. While they have a verbal understanding that if one passes away, their share should go to their own family and not automatically to the other purchaser, they have not formally documented this intention beyond their initial agreement. Considering the legal frameworks governing property ownership in South Australia, which approach best addresses their situation to ensure their intentions are legally protected? Option A. Suggests they consider a leasehold arrangement, as this clearly defines their rights to occupy and use the property for a specified period. Option B. Explain the implications of tenancy in common and ensure the certificate of title reflects this form of ownership, allowing each individual to direct their share to their chosen beneficiaries upon death. Option C. Recommend they proceed with the purchase without specifying a particular form of co-ownership on the title, relying on their verbal agreement to govern their respective interests. Option D. Advise them to register as joint tenants on the certificate of title, as this is the most common form of co-ownership for purchasers contributing equally. Correct answer is D. Advise them to register as joint tenants on the certificate of title, as this is the most common form of co-ownership for purchasers contributing equally. Explanation. The assessment process reveals a common yet complex scenario in South Australian real estate where differing intentions regarding property ownership can lead to disputes if not clearly documented and understood. The challenge lies in distinguishing between the legal implications and practical outcomes of various ownership structures, particularly when parties may have informal understandings that do not align with legal definitions. Careful judgment is required to ensure that the chosen ownership structure accurately reflects the parties' intentions and complies with South Australian property law. The best professional approach involves clearly identifying the parties' intentions and advising them on the most suitable ownership structure under South Australian law, ensuring all legal requirements are met and documented. This includes explaining the implications of each type of ownership, such as the right of survivorship in joint tenancy versus the ability to bequeath property independently in tenancy in common. This approach is correct because it prioritizes client understanding and legal compliance, aligning with the principles of professional conduct and the requirements of the Land and Business, Sale and Conveyancing Act 1994, SA, and the Real Property Act 1886, SA, which govern property transactions and registration in South Australia. It ensures that the chosen form of ownership is legally sound and protects the interests of all parties involved. An incorrect approach would be to assume that a simple verbal agreement or a shared contribution to the purchase price automatically equates to a specific type of ownership, such as joint tenancy, without formal legal advice and registration. This fails to acknowledge the distinct legal characteristics of each ownership type and the necessity of proper documentation. Such an assumption could lead to unintended consequences, such as a property passing to a survivor automatically when that was not the intention, or disputes over the division of the property upon sale or death, potentially contravening the principles of fairness and the legal framework for property division in South Australia. Another incorrect approach is to advise parties to adopt a form of ownership that is not legally recognized or registrable in South Australia, or to proceed with a transaction without ensuring the chosen ownership structure is correctly reflected on the certificate of title. This demonstrates a lack of understanding of the Torrens system and the specific provisions of South Australian property law, which mandate registration for legal recognition of property interests. This failure to adhere to statutory requirements can render the ownership arrangement unenforceable and expose both the advisor and the parties to significant legal risk. Professionals should employ a decision-making framework that begins with a thorough consultation to ascertain the client's precise intentions and circumstances. This should be followed by a detailed explanation of the available ownership structures in South Australia: fee simple, leasehold, joint tenancy, tenancy in common, highlighting their legal implications, rights, and obligations. The professional must then recommend the structure that best aligns with the client's stated intentions and legal capacity, ensuring all necessary documentation is prepared and lodged correctly with the relevant South Australian authorities, such as the Land Services SA. Ethical considerations demand transparency, competence, and acting in the best interests of the client, which necessitates a deep understanding of the applicable South Australian legislation. Question 7. Strategic planning requires a real estate agent in South Australia to thoroughly understand the implications of local zoning laws and land use regulations. If a client expresses a desire to develop a property for a purpose that appears to conflict with the current zoning classification under the relevant South Australian Council's development plan, what is the most responsible and legally compliant course of action for the agent? Option A. Advise the client that any development is achievable as long as they are prepared to invest financially in the application process, irrespective of current zoning. Option B. Market the property based on the client's desired use, assuming that a development application will ultimately resolve any zoning discrepancies. Option C. Conduct a detailed review of the property's current zoning classification, permitted uses under the applicable South Australian Development Plan, and research any relevant planning policies or proposed amendments that might impact the client's proposal, then clearly communicate these findings and potential pathways to the client. Option D. Inform the client that zoning regulations are merely guidelines and can be easily overcome with sufficient negotiation with the local council. The correct answer is C. Conduct a detailed review of the property's current zoning classification, permitted uses under the applicable South Australian Development Plan, and research any relevant planning policies or proposed amendments that might impact the client's proposal, then clearly communicate these findings and potential pathways to the client. Explanation. Scenario analysis. This scenario presents a professional challenge for a real estate agent in South Australia due to the inherent complexity and potential for conflict when a proposed development clashes with existing zoning regulations. Navigating these regulations requires a thorough understanding of the Planning, Development and Infrastructure Act 2016 (SA), and the relevant development plan for the specific council area. Failure to accurately advise clients can lead to significant financial loss, legal disputes, and damage to professional reputation. The agent must balance the client's aspirations with the legal framework governing land use. Correct approach analysis. The best professional approach involves a comprehensive review of the relevant South Australian planning legislation and the specific development plan applicable to the property's location. This includes identifying the current zoning classification, understanding the permitted uses within that zone, and researching any proposed amendments or variations to the development plan that might affect the client's proposal. The agent should then clearly communicate the findings to the client, outlining the feasibility of their proposal under current regulations, potential hurdles, and the process for seeking variations or alternative development pathways if necessary. This approach is correct because it prioritizes accurate, legally compliant advice, fulfilling the agent's duty of care and professional obligations under South Australian law. It ensures the client is fully informed of their rights and limitations, enabling them to make realistic decisions. Incorrect approaches analysis. One incorrect approach involves proceeding with marketing the property based solely on the client's desired use without verifying its compliance with current zoning laws. This is professionally unacceptable as it misrepresents the property's potential and violates the agent's duty to provide truthful and accurate information. It contravenes the spirit and letter of South Australian planning legislation, which mandates adherence to zoning for orderly development. Another incorrect approach is to advise the client that any development is possible simply because they are willing to pay for it, without considering the established planning framework. This demonstrates a disregard for the Planning, Development and Infrastructure Act 2016 (SA) and the principles of land use planning. It can lead to the client incurring substantial costs on a project that is unlikely to receive development approval, causing financial harm and professional misconduct. A further incorrect approach is to suggest that the client can bypass zoning regulations by simply submitting a development application, implying that the application process itself will override existing zoning. While development applications are the mechanism for seeking approval, they must be assessed against the prevailing development plan. Submitting an application that fundamentally conflicts with zoning without understanding the likelihood of success or the need for a variation is misleading and unprofessional. Professional reasoning. Professionals in South Australia must adopt a proactive and informed approach. This involves a commitment to continuous learning regarding planning legislation and local council development plans. When faced with a client's ambitious development proposal, the professional decision-making process should involve 1. Thoroughly understanding the client's objective. 2. Conducting diligent research into the property's current zoning and any relevant planning policies or proposed changes. 3. Clearly communicating the legal constraints and opportunities to the client, supported by evidence from the relevant legislation and development plan. 4. Advising on realistic pathways forward, including the potential need for variations or alternative strategies, and managing client expectations accordingly. This systematic process ensures ethical conduct and compliance with South Australian real estate and planning laws. Question 8. The audit findings indicate that a property manager in South Australia has received a request from a long-term, reliable tenant for a temporary rent reduction due to unforeseen financial hardship. The property manager has a good working relationship with the tenant and believes their request is genuine. However, the property manager has not yet consulted with the property owner regarding this request. Which of the following actions best represents professional conduct and compliance with South Australian property management regulations? Option A. Promptly inform the property owner of the tenant's request, providing all relevant details and a professional recommendation on how to proceed, allowing the owner to make the final decision. Option B. Agree to the rent reduction and immediately inform the owner that the decision has been made to assist the tenant. Option C. Inform the tenant that rent reductions are not possible and advise them to seek alternative financial assistance. Option D. Unilaterally agree to the tenant's requested rent reduction to maintain a good tenant relationship and inform the owner of the decision later. The correct answer is A. Promptly inform the property owner of the tenant's request, providing all relevant details and a professional recommendation on how to proceed, allowing the owner to make the final decision. Explanation. The audit findings indicate a potential breach of trust and professional conduct in property management within South Australia. This scenario is professionally challenging because it requires the property manager to balance the immediate financial needs of the owner with their overarching legal and ethical obligations to all parties involved, including tenants and regulatory bodies. The property manager must exercise careful judgment to ensure transparency, fairness, and compliance with the Residential Tenancies Act 1995, SA, and the principles of good property management. The best professional approach involves promptly and transparently communicating the tenant's request for a rent reduction to the property owner, providing them with all relevant information, and a clear recommendation based on market conditions and the tenant's circumstances. This approach is correct because it upholds the property manager's duty of care to the owner by providing them with the necessary information to make an informed decision, while also respecting the tenant's situation. It aligns with the principles of acting honestly and professionally, as expected under South Australian property law and general ethical standards for real estate agents. This proactive and transparent communication ensures that the owner is fully aware of the situation and can make a decision that is both commercially sound and legally compliant, avoiding potential disputes or breaches of the tenancy agreement. An incorrect approach would be to unilaterally agree to the rent reduction without consulting the owner. This fails to acknowledge the owner's ultimate authority over their property and their right to approve changes to the lease agreement, breaches the property manager's fiduciary duty to the owner, and potentially contravenes clauses within the management agreement. Another incorrect approach would be to ignore the tenant's request and simply inform them that rent cannot be reduced. While this might seem like a straightforward response, it fails to demonstrate professional diligence and a willingness to explore potential solutions that could benefit both parties, such as a temporary reduction or a payment plan. This lack of engagement can lead to tenant dissatisfaction and potential disputes, negatively impacting the property's reputation and the property manager's professional standing. A further incorrect approach would be to agree to the rent reduction and then inform the owner after the fact, presenting it as a fait accompli. This is a serious breach of trust and transparency. It undermines the owner's confidence in the property manager's integrity and professionalism, and it prevents the owner from exercising their right to approve or reject the proposed change to the tenancy agreement. The professional reasoning process for similar situations should involve 1. Understanding the specific request and its implications. 2. Reviewing the management agreement and relevant legislation. In this case, the Residential Tenancies Act 1995 SAW. 3. Assessing the situation objectively, considering market conditions and tenant history. 4. Communicating transparently and promptly with the property owner, providing all necessary information and a professional recommendation. 5. Documenting all communications and decisions. Question 9. Strategic planning requires a real estate professional in South Australia to assess the current and future viability of property investments. Considering the unique economic landscape of South Australia, which analytical approach would best inform a client's investment decisions regarding residential property within the state? Option A. Analyzing South Australian specific economic indicators such as state-level employment figures, population migration patterns into and out of SA, major infrastructure projects planned or underway in SA, and state government housing policies, and then correlating these with local property market trends and demand. Option B. Relying on general media commentary about the Australian property market and personal observations of local street activity to gauge market sentiment. Option C. Focusing solely on interest rate movements announced by the Reserve Bank of Australia and their potential impact on mortgage affordability across the country, without specific consideration for South Australian housing supply and demand. Option D. Extrapolating national economic growth forecasts and applying a general percentage adjustment to South Australian property values, assuming the state market will mirror broader Australian trends. The correct answer is A. Analyzing South Australian specific economic indicators such as state-level employment figures, population migration patterns into and out of SA, major infrastructure projects planned or underway in SA, and state government housing policies, and then correlating these with local property market trends and demand. Explanation: this scenario is professionally challenging because it requires a real estate professional to navigate the complex interplay between broad economic trends and their specific impact on the South Australian SA property market, while adhering to ethical obligations and regulatory requirements. The challenge lies in providing advice that is both accurate and actionable, grounded in evidence, and avoid speculation or misleading statements. Careful judgment is required to distinguish between general economic commentary and specific, localized market analysis relevant to a client's decision-making. The best approach involves a detailed analysis of South Australian economic indicators and their direct implications for the SA real estate market. This includes examining local employment trends, population growth, infrastructure development projects within SA, and state-specific government policies affecting property. By focusing on these localized factors, a professional can provide tailored advice that accurately reflects the current and projected conditions of the SA market. This aligns with the ethical duty to act in the client's best interest by providing relevant and informed guidance, and with the regulatory expectation under the South Australian Residential Tenancies Act 1995 and the Land Agents Act 1994, SAW, to provide competent and accurate advice based on market knowledge. An incorrect approach would be to rely solely on national economic forecasts without considering their specific translation to the SA context. National trends may not accurately reflect the unique supply and demand dynamics, regional variations, or specific economic drivers within South Australia. This could lead to advice that is misleading and detrimental to the client. Another incorrect approach is to base advice on anecdotal evidence or personal opinions about the market without substantiating it with data. This lacks professional rigor and fails to meet the standard of care expected of a licensed agent in South Australia. Finally, focusing on speculative future market movements without a clear basis in current SA economic data and trends is unprofessional and potentially misleading, as it prioritizes conjecture over informed analysis. Professionals should employ a decision-making framework that prioritizes evidence-based analysis. This involves first identifying the client's specific needs and objectives, then gathering relevant economic data, focusing on South Australian specific indicators. This data should be analyzed to understand its direct impact on property values, rental yields, and market activity with an essay. Finally, advice should be communicated clearly, explaining the rationale behind the conclusions and any associated risks, ensuring transparency and informed consent from the client. Question 10. Market research demonstrates a growing interest in investment properties in Adelaide, South Australia. A real estate agent is providing an investment analysis for a client considering purchasing a residential property. The property is expected to generate a gross annual rental income of $30,000. The estimated annual expenses are property management fees at 8% of gross rent, council rates of $1,500, water rates of $800, land tax of $1,200, building insurance of $900, and an allowance for repairs and maintenance of $1,000. Calculate the net annual rental income for this property. Option A, $27,600. Option B, $21,900. Option C, $23,100. Option D, $25,500. The correct answer is B, $21,900. Explanation: this scenario presents a professional challenge due to the need to accurately calculate and present the net rental income, a critical factor for potential investors and a key component of property valuation in South Australia. Miscalculations can lead to misleading financial projections, potentially causing significant financial detriment to the client and damaging the agent's professional reputation. The agent must demonstrate a thorough understanding of South Australian property law and accounting principles relevant to rental income. The correct approach involves meticulously calculating the gross rental income and then deducting all allowable expenses as per South Australian residential tenancy legislation and common accounting practices for property investment. This includes subtracting property management fees, council rates, water rates, land tax, insurance premiums, and any necessary maintenance or repair costs. The remaining figure represents the net rental income, which is the most accurate representation of the property's profitability. This method aligns with the principles of transparency and accuracy required under the Residential Tenancies Act 1995, SA, and the general duty of care owed by a real estate agent to their client. An incorrect approach would be to simply present the gross rental income without any deductions. This fails to provide a realistic picture of the property's financial performance and is misleading to potential investors. It violates the principle of providing accurate information and could be considered a breach of duty of care. Another incorrect approach is to deduct only a portion of the expenses, such as only property management fees, while ignoring other significant costs like council rates and land tax. This also leads to an inaccurate representation of net income and is ethically questionable. Finally, an approach that includes speculative or non-allowable expenses in the deduction would also be incorrect, as it distorts the true financial outcome and may contravene accounting standards or specific provisions within South Australian tenancy law regarding deductible expenses. Professionals should adopt a systematic decision-making process. First, identify all potential income streams and all potential deductible expenses relevant to the specific property and its management in South Australia. Second, verify the accuracy of all figures and ensure all deductions are legitimate and compliant with relevant legislation. Third, present the net rental income clearly, detailing all income and expense components to ensure transparency. Question 11. Compliance review shows that a real estate agent in South Australia is responsible for screening multiple applicants for a rental property. The landlord has expressed a strong preference for a tenant who is financially stable and has a proven track record of responsible tenancy. Which of the following screening processes best aligns with South Australian residential tenancy laws and ethical professional conduct? Option A. Prioritizing applicants who appear to fit a specific demographic profile that the agent believes is typically associated with reliable tenants based on their personal observations. Option B. Conducting brief interviews and making selection decisions primarily based on the agent's subjective impression of the applicant's personality and perceived lifestyle. Option C. A comprehensive review of each applicant's financial capacity through income verification and rental history checks, alongside a thorough assessment of references provided to gauge their past performance as tenants. Option D. Rejecting applicants who are students or who work in industries that the agent perceives as less stable, regardless of their verifiable financial capacity or rental history. The correct answer is C. A comprehensive review of each applicant's financial capacity through income verification and rental history checks, alongside a thorough assessment of references provided to gauge their past performance as tenants. Explanation: this scenario is professionally challenging because it requires a real estate agent in South Australia to balance the landlord's desire for a reliable tenant with the legal and ethical obligations to avoid discrimination. The agent must navigate the screening process in a way that is both effective in identifying suitable candidates and compliant with the Residential Tenancies Act 1995, SA, and the Equal Opportunity Act 1984, SA. A rigorous yet fair process is essential to prevent legal repercussions and maintain professional integrity. The best approach involves a multifaceted assessment that focuses on objective criteria directly related to a tenant's ability to meet their obligations under a lease agreement. This includes verifying financial capacity through income checks and rental history, assessing references for reliability and adherence to previous tenancy terms, and conducting a thorough review of the application form for completeness and consistency. This method is correct because it adheres to the principles of fair housing and non-discrimination by evaluating all applicants based on the same objective standards, thereby minimizing the risk of unlawful discrimination based on protected attributes. It directly addresses the landlord's legitimate interest in securing a tenant who can pay rent and maintain the property without resorting to discriminatory practices. An approach that involves making assumptions about an applicant's reliability based on their perceived background or lifestyle, without objective evidence, is professionally unacceptable. This could lead to indirect discrimination, where a seemingly neutral practice has a disproportionately negative impact on individuals from a particular group. For instance, rejecting an applicant because they appear to be a student or have a particular occupation without verifying their financial capacity to pay rent is discriminatory and violates the spirit and letter of South Australian tenancy and equal opportunity laws. Another unacceptable approach is to solely rely on subjective impressions or personal biases during the interview process. While rapport is important, decisions must be grounded in verifiable facts. Basing a selection on a gut feeling that is not supported by objective evidence, such as a poor rental history or insufficient income, opens the door to discriminatory practices and can be challenged legally. Finally, an approach that prioritizes speed over thoroughness, leading to a superficial review of applications and references, is also professionally unsound. This can result in overlooking red flags that might indicate a potential tenant's inability to meet their obligations, or conversely, unfairly rejecting a suitable applicant due to a rushed and incomplete assessment. Professionals should adopt a decision-making framework that prioritizes objective, verifiable criteria. This involves developing a standardized application process, clearly defining the criteria for tenant selection, e.g., income-to-rent ratio, positive rental history, satisfactory references, and applying these criteria consistently to all applicants. Regular training on anti-discrimination laws and best practices in tenant screening is crucial to ensure ongoing compliance and ethical conduct. Question 12. Analysis of a scenario where a real estate agent in South Australia is assisting a client who is purchasing a property and has expressed concerns about managing their monthly repayments. The client is exploring different mortgage options. Which approach best reflects the agent's professional responsibilities and regulatory obligations in South Australia when discussing mortgage types? Option A. The agent explains the fundamental differences between fixed-rate, adjustable rate, and interest-only mortgages, outlining the general characteristics of each and their typical impact on repayment structures, while advising the client to consult a licensed financial advisor for personalized recommendations. Option B. The agent recommends an adjustable rate mortgage, highlighting its typically lower initial repayment as the most suitable option for the client's stated goal of managing monthly expenses. Option C. The agent focuses on the long-term stability of a fixed-rate mortgage, strongly advising the client against adjustable rate or interest-only options due to potential future payment increases. Option D. The agent suggests that an interest-only mortgage is a smart strategy for the client to build equity faster by freeing up cash flow for other investments. The correct answer is A. The agent explains the fundamental differences between fixed-rate, adjustable-rate, and interest-only mortgages, outlining the general characteristics of each and their typical impact on repayment structures, while advising the client to consult a licensed financial advisor for personalized recommendations. Explanation: scenario analysis. This scenario is professionally challenging because it requires a real estate agent in South Australia to accurately advise a client on mortgage types without providing financial advice, which falls outside their licensing scope. The agent must understand the fundamental differences between fixed-rate, adjustable-rate, and interest-only mortgages, and how these might align with a client's stated financial goals, while strictly adhering to the limitations of their professional role and South Australian consumer protection laws. Misrepresenting or overstepping professional boundaries can lead to significant ethical breaches and legal repercussions. Correct approach analysis. The best professional practice involves the agent clearly explaining the general characteristics and implications of each mortgage type, fixed rate, adjustable rate, interest only, in a neutral and informative manner, focusing on how each type typically functions and its general impact on repayment structures. This approach is correct because it educates the client on the available options without recommending a specific product or advising on which is best for their individual circumstances. This aligns with the principles of the Real Estate and Business Agents Act 1994, SA, and its associated regulations, which mandate honesty, fairness, and competence, while also implicitly prohibiting the unlicensed practice of financial advice. The agent's role is to facilitate understanding of the product landscape, not to guide the client's financial decision-making. Incorrect approaches analysis, recommending a specific mortgage type as the most suitable for the client's situation, even if based on the agent's perception of the client's stated goals, constitutes providing financial advice. This is a regulatory failure under South Australian law, as real estate agents are not licensed to provide such advice. This could mislead the client into believing the recommendation is professionally vetted financial guidance, potentially leading to poor financial outcomes. Suggesting that an interest-only mortgage is a good way to save money without detailing the significant risks, and the fact that the principal remains unpaid also crosses the line into financial advice. This omits crucial information about the long-term repayment obligations and the potential for increased overall interest paid if the principal is not addressed. This failure to provide a balanced and complete picture is an ethical breach and potentially misleading conduct. Focusing solely on the lower initial repayment of an adjustable-rate mortgage without explaining the risk of future interest rate increases and subsequent payment hikes is also problematic. While not explicitly recommending it, highlighting only the positive aspect without the corresponding risk is an incomplete and potentially deceptive representation of the product, failing to meet the standard of providing fair and accurate information. Professional reasoning. Professionals in South Australia must operate within their defined scope of practice. When discussing financial products like mortgages, the decision-making process should involve 1. Identifying the client's stated needs and goals. 2. Explaining the general features and typical implications of relevant product categories, e.g., fixed-rate, adjustable-rate, interest-only mortgages, in a factual and unbiased manner. 3. Clearly delineating the boundaries of their professional expertise, explicitly stating that they are not providing financial advice. 4. Recommending that the client seek independent, licensed financial advice for personalized recommendations and guidance. 5. Ensuring all information provided is accurate, balanced, and does not omit material risks or benefits. Question 13. The review process indicates a potential contamination issue at commercial property in South Australia, SA, that a real estate agent is preparing for sale. The agent has received an anonymous tip suggesting historical industrial use may have led to soil contamination. What is the most appropriate course of action for the agent to ensure compliance with SA's regulatory framework and ethical obligations? Option A. Instruct the agent to ignore the tip, as it is anonymous and unverified, and focus solely on marketing the property's positive attributes to achieve the best sale price for the seller. Option B. Advise the seller to conduct a basic visual inspection, and if no obvious signs of contamination are present, proceed with marketing the property without further investigation, mentioning the tip as unsubstantiated rumor. Option C. Engage a qualified environmental consultant to conduct a thorough site assessment and disclose all findings, including potential remediation costs and implications, to all prospective buyers. Option D. Inform the seller of the tip and suggest they instruct the agent to disclose the rumor to potential buyers in a general statement, without providing any specific details or evidence. The correct answer is C. Engage a qualified environmental consultant to conduct a thorough site assessment and disclose all findings, including potential remediation costs and implications, to all prospective buyers. Explanation. The review process indicates a potential environmental concern associated with a commercial property in South Australia, SA, that a real estate agent is marketing. This scenario is professionally challenging because it requires the agent to balance their duty to their client, the seller, with their obligations under SA's environmental laws and ethical professional conduct. Mismanaging this situation could lead to legal penalties, reputational damage, and harm to potential buyers. Careful judgment is required to ensure full disclosure and compliance without misrepresenting the property's condition or value. The best professional approach involves proactively investigating the reported environmental concern and obtaining expert advice. This means engaging qualified environmental consultants to conduct a thorough site assessment and determine the nature, extent, and potential remediation requirements of the issue. The agent should then transparently disclose all findings, reports, and potential implications to all prospective buyers, allowing them to make informed decisions. This approach aligns with the principles of the Land and Business Sale and Conveyancing Act 1994 SA and the Real Estate and Business Agents Act 1994 SA, which mandate honesty and disclosure. Ethically, it upholds the agent's duty of care and fair dealing towards all parties involved in the transaction. An incorrect approach would be to ignore the reported concern or downplay its significance in marketing materials. This failure to investigate and disclose known or suspected environmental issues constitutes a breach of the agent's statutory obligations under SA law. It misleads potential buyers about the property's true condition and potential future liabilities, which could include significant remediation costs or restrictions on use. This conduct is ethically unsound and exposes the agent to legal action from buyers and disciplinary action from the relevant regulatory bodies in SA. Another incorrect approach is to disclose the concern vaguely without providing concrete details or evidence. While disclosure is made, the lack of specific information prevents buyers from fully understanding the risks and making a truly informed decision. This partial disclosure can be seen as an attempt to circumvent the spirit of the law, which requires comprehensive and transparent communication. It fails to meet the standard of full disclosure expected under SA's property sale regulations and ethical guidelines. A further incorrect approach would be to conduct a superficial assessment without engaging qualified professionals. Relying on anecdotal evidence or a quick visual inspection is insufficient to address potentially complex environmental issues. This demonstrates a lack of due diligence and professional responsibility, failing to adequately inform buyers about potential environmental hazards and their associated costs or legal implications under SA legislation. Professionals should adopt a decision-making framework that prioritizes regulatory compliance and ethical conduct. This involves 1. Identifying potential risks and legal obligations early in the process. 2. Seeking expert advice when dealing with specialized matters like environmental concerns. 3. Ensuring full and transparent disclosure of all material facts to all parties. 4. Documenting all communications and actions taken. 5. Acting with integrity and in the best interests of all parties within the bounds of the law. Question 14. Performance analysis shows a real estate agent in South Australia, SA, has a friend who is interested in purchasing a property the agent is currently listing. The agent is aware of a significant, undisclosed structural defect in the property that is not immediately obvious. Which of the following approaches best demonstrates professional conduct and adherence to South Australian real estate regulations? Option A. Advise the friend buyer to proceed with the purchase without mentioning the structural defect, assuming they will discover it during their own due diligence. Option B. Downplay the severity of the structural defect to both the seller and the friend buyer to facilitate a smoother transaction. Option C. Inform the friend buyer about the structural defect, but omit this information from the seller and their agent to avoid jeopardizing the sale. Option D. Immediately disclose the structural defect to the seller and their agent, recommend a professional inspection, and advise the friend buyer to seek independent advice and conduct their own inspection. Correct answer is D. Immediately disclose the structural defect to the seller and their agent, recommend a professional inspection, and advise the friend buyer to seek independent advice and conduct their own inspection. Explanation. Performance analysis shows a real estate agent in South Australia, SA, is facing a situation where a potential buyer, who is also a friend, is expressing interest in a property listed by the agent. The agent is aware of a significant structural issue with the property that has not been disclosed to the seller's agent and is not readily apparent. This scenario is professionally challenging because it pits the agent's personal relationship and potential for a quick sale against their fundamental legal and ethical obligations to all parties involved in a property transaction. The agent must navigate potential conflicts of interest and ensure transparency and fairness, adhering strictly to the principles of the South Australian Residential Tenancies Act 1995 and the Real Estate Business Agents Act 1994, as well as the professional standards set by the Real Estate Institute of South Australia, RISA. The best professional practice involves immediately disclosing the known structural issue to the seller and their agent, recommending a professional inspection, and advising the friend buyer to obtain their own independent advice and inspection. This approach upholds the agent's duty of care and honesty to both the seller, by ensuring full disclosure of material facts that could affect the sale price or desirability, and the buyer, by not misleading them and allowing them to make an informed decision. It aligns with the principles of acting with integrity and competence, as mandated by professional codes of conduct and the spirit of consumer protection legislation in South Australia. This ensures that the transaction proceeds with full knowledge and consent from all parties, mitigating future disputes and upholding the agent's reputation. An approach where the agent downplays or omits the structural issue to facilitate the sale to their friend is ethically and regulatorily unsound. This constitutes a failure to disclose material facts, which is a breach of the agent's duty to the seller and potentially misleading to the buyer. Such conduct could lead to legal repercussions under the Real Estate Business Agents Act 1994, including disciplinary action, fines, or suspension of their license. Furthermore, it violates the fundamental ethical obligation to act with honesty and integrity, damaging the trust essential in real estate dealings. Another incorrect approach would be to inform the friend buyer of the issue without informing the seller or their agent. While this might seem like a way to protect the friend, it still breaches the duty owed to the seller to disclose all material information that could impact the sale. It creates an uneven playing field and undermines the integrity of the agency relationship with the seller. Finally, an agent choosing to withdraw from representing either party without proper disclosure or explanation would also be unprofessional. While avoiding a conflict is sometimes necessary, the manner of withdrawal must still be handled ethically, ensuring that no party is left uninformed or disadvantaged due to the agent's actions or inactions. Professionals should adopt a decision-making framework that prioritizes transparency, honesty, and adherence to legal and ethical obligations. This involves identifying potential conflicts of interest early, understanding the specific duties owed to each party under relevant legislation, like the Real Estate Business Agents Act 1994 in SA, and consulting professional guidelines, such as those from RISA. When in doubt, seeking advice from a supervisor, legal counsel, or a professional body is crucial to ensure all actions are compliant and ethically sound. Question 15. The performance metrics show a consistent trend of potential buyers expressing interest in properties listed by your agency, with a notable number of these buyers indicating they are not represented by their own agent. In South Australia, if you are acting as the seller's agent for a property and a buyer who is not represented by their own agent expresses interest in purchasing that property, what is the most ethically and legally sound approach to manage this situation? Option A. Continue to act solely as the seller's agent, providing all information to the seller and advising the buyer on the property's condition and price without formally representing their interests, assuming this avoids a conflict. Option B. Disclose the potential for dual agency to both the seller and the buyer in writing, clearly outlining your responsibilities and limitations, and obtain their informed written consent before proceeding to represent both parties in the transaction. Option C. Advise the unrepresented buyer to seek independent legal or real estate advice, but proceed with the transaction as the seller's agent without disclosing the buyer's interest to the seller, as this is standard practice. Option D. Immediately cease all communication with the unrepresented buyer to avoid any perception of conflict, and advise the seller to find another agent if the buyer wishes to proceed. The correct answer is B. Disclose the potential for dual agency to both the seller and the buyer in writing, clearly outlining your responsibilities and limitations, and obtain their informed written consent before proceeding to represent both parties in the transaction. Explanation. This scenario is professionally challenging because it involves navigating potential conflicts of interest inherent in representing multiple parties in a real estate transaction within South Australia. The agent must uphold their fiduciary duties to all clients while adhering to the strict disclosure and conduct requirements mandated by the South Australian Residential Tenancies Act 1995 and the Land Agents Act 1994, along with associated regulations, and the Real Estate Institute of South Australia, RISA, Code of Conduct. Careful judgment is required to ensure transparency, fairness, and legal compliance. The best professional approach involves clearly defining the agency relationship from the outset and obtaining informed consent from all parties for any dual agency situation. This means the agent acts as a seller's agent for the initial listing and marketing of the property. If a buyer expresses interest, and the agent believes they can ethically and legally represent both parties, they must immediately disclose this potential dual agency to both the seller and the buyer. This disclosure must be in writing and clearly outline the agent's responsibilities to each party, the limitations of their representation in a dual agency scenario, and the potential for conflicts of interest. Obtaining written consent from both the seller and the buyer before proceeding with dual agency is paramount. This approach ensures that all parties are fully aware of the agent's role and potential conflicts, thereby upholding the principles of transparency and informed consent required by South Australian real estate law and ethical practice. An approach where the agent continues to act solely as the seller's agent, while secretly facilitating a sale to a buyer they are also advising without full disclosure, is ethically and legally unacceptable. This failure to disclose dual agency violates the agent's fiduciary duty to the seller, as they are not acting with undivided loyalty. It also breaches the principles of fair dealing with the buyer, who is not receiving independent advice. Such conduct contravenes the disclosure requirements under the Land Agents Act 1994 and the RISA Code of Conduct, potentially leading to disciplinary action, loss of commission, and legal liability. Another unacceptable approach is to refuse to represent the buyer altogether simply because the agent is already representing the seller. While a seller's agent's primary duty is to the seller, refusing to engage with a potential buyer who expresses interest, without exploring the possibility of a disclosed dual agency or referring the buyer to another agent, can be seen as a missed opportunity and potentially poor client service, though not necessarily a direct breach of law if handled professionally. However, the most critical failure lies in proceeding with a transaction where dual agency exists without proper disclosure and consent. Professionals should adopt a decision-making framework that prioritizes transparency and client interests. When a potential conflict of interest arises, such as a buyer represented by the seller's agent, the agent must immediately pause and assess the situation. The first step is to identify the potential conflict. The next step is to consult relevant legislation and professional codes of conduct. The agent must then communicate openly and honestly with all parties involved, explaining the nature of the conflict and the available options, including the possibility of disclosed dual agency or referring one party to another agent. Obtaining informed, written consent for any agreed-upon course of action is the final, crucial step before proceeding. Question 16. Investigation of a South Australian-based real estate investment trust, REIT, reveals a proposal for the REIT to acquire a commercial property from a company that is a significant shareholder in the REIT management entity. The REIT manager believes the acquisition is strategically sound and offers a competitive return. What is the most appropriate course of action for the REIT to ensure compliance with South Australian and Australian federal regulations and best corporate governance practices? Option A. Rely on the REIT manager's existing knowledge of the property and the vendor's reputation to justify the transaction. Option B. Obtain an independent expert valuation of the property and seek unit holder approval for the acquisition. Option C. Expedite the acquisition process to secure the property before potential market fluctuations, deferring detailed valuation and unit holder consultation until after completion. Option D. Proceed with the acquisition based on the rate manager's internal assessment of its strategic value and potential returns. Correct answer is B. Obtain an independent expert valuation of the property and seek unit holder approval for the acquisition. Explanation. This scenario is professionally challenging because it requires balancing the fiduciary duties owed to investors with the practicalities of managing a real estate investment trust REIT in South Australia. The core tension lies in ensuring that investment decisions, particularly those involving related parties, are transparent, fair, and demonstrably in the best interests of all unit holders, not just a select few. Careful judgment is required to navigate potential conflicts of interest and adhere strictly to the Corporations Act 2001, CTH, and the ASX listing rules, which govern listed entities like REIT. The best professional approach involves proactively seeking independent expert advice and obtaining unit holder approval for significant related party transactions. This approach is correct because it directly addresses the potential for conflicts of interest inherent in related party dealings. By obtaining an independent expert's valuation and recommendation, the REIT demonstrates that the transaction is on arm's-length terms and is fair and reasonable to unit holders who are not associates of the related party. Subsequently seeking unit holder approval, typically through an ordinary resolution, provides a democratic mechanism for investors to ratify or reject the proposed transaction, reinforcing the REIT commitment to good corporate governance and unit holder interests. This aligns with the principles of Chapter 2E of the Corporations Act 2001, CTH, concerning financial assistance to related parties, and the spirit of the ASX listing rules regarding continuous disclosure and related party transactions. An approach that proceeds with the transaction without independent valuation or unit holder approval is professionally unacceptable. This failure to obtain independent advice risks the transaction not being on arm's-length terms, potentially disadvantaging the REIT and its unit holders. The absence of unit holder approval bypasses a crucial governance mechanism designed to protect minority interests and can be seen as a breach of fiduciary duty, potentially violating Section 610 of the Corporations Act 2001, CTH, if it constitutes giving a financial benefit to a related party without proper disclosure and approval. Another professionally unacceptable approach is to rely solely on the REIT manager's internal assessment of the transaction's fairness. While internal due diligence is necessary, it cannot substitute for independent expert scrutiny when dealing with related parties. This internal assessment lacks the objectivity required to satisfy regulatory expectations and protect unit holders from potential conflicts of interest, failing to meet the standards expected under the Corporations Act 2001, CTH, and the ASX listing rules for related party transactions. Finally, an approach that prioritizes speed of execution over thorough governance processes is also unacceptable. While market opportunities can be time-sensitive, rushing a significant related party transaction without proper due diligence, independent advice, and unit holder consultation can lead to poor investment decisions and regulatory breaches. This demonstrates a disregard for the principles of good corporate governance and fiduciary responsibility. Professionals should adopt a decision-making framework that prioritizes transparency, fairness, and compliance. This involves identifying potential conflicts of interest early, understanding the relevant regulatory requirements, such as Chapter 2E of the Corporations Act 2001, CTH, and ASX listing rules, seeking independent expert advice for significant related party transactions, and ensuring appropriate unit holder consultation and approval processes are followed. A proactive and diligent approach to governance safeguards both the REIT reputation and the financial interests of its investors. Question 17. Comparative studies suggest that buyers in South Australia can be unclear about the implications of private mortgage insurance, PMI. A real estate agent is assisting a buyer who is seeking to purchase a property with a deposit of 10%. The lender has indicated that PMI will be required. From the buyer's perspective, which of the following best describes the agent's professional responsibility regarding the explanation of PMI? Option A. State that PMI is a standard part of the process when a deposit is less than 20% without further elaboration. Option B. Suggest that PMI is an optional cost that can be avoided if the buyer is willing to increase their deposit without fully explaining the lender's requirements. Option C. Clearly explain that PMI is a requirement from the lender due to the low deposit, detailing its purpose, estimated cost, and advising the buyer to seek independent financial advice regarding its impact. Option D. Focus on the benefit of PMI, allowing the buyer to purchase with a lower deposit, without detailing the associated costs or the fact that it primarily protects the lender. The correct answer is C. Clearly explain that PMI is a requirement from the lender due to the low deposit, detailing its purpose, estimated cost, and advising the buyer to seek independent financial advice regarding its impact. Explanation. Scenario analysis. This scenario is professionally challenging because it requires a real estate agent in South Australia to navigate the complexities of private mortgage insurance, PMI, from the perspective of a buyer who may not fully understand its implications. The agent must balance their duty to facilitate a sale with their fiduciary responsibility to ensure the buyer is fully informed and making a sound financial decision, especially when PMI is a significant cost factor. Misrepresenting or downplaying the necessity and cost of PMI can lead to significant financial detriment for the buyer and potential professional repercussions for the agent. Correct approach analysis. The best professional practice involves clearly and comprehensively explaining to the buyer that private mortgage insurance is a requirement imposed by lenders when a deposit is less than 20% of the purchase price in South Australia. This explanation must detail what PMI is, why it is required by the lender, its estimated cost, both upfront and ongoing if applicable, and how it protects the lender, not the borrower. The agent should advise the buyer to seek independent financial advice regarding the long-term implications of PMI on their mortgage affordability and overall financial health. This approach aligns with the principles of transparency, disclosure, and acting in the best interests of the client, as mandated by the Real Estate and Business Agents Act 1994, SA, and its associated regulations, which require agents to act honestly and competently and to disclose all material facts. Incorrect approach is analysis. One incorrect approach is to simply state that PMI is a standard part of the process without elaborating on its purpose, cost, or implications for the buyer. This fails to meet the disclosure obligations under South Australian law, as it omits crucial information that a reasonable buyer would consider material to their decision. It can be construed as misleading conduct. Another incorrect approach is to suggest that PMI is an optional cost that can be avoided if the buyer is willing to increase their deposit, without fully explaining the lender's strict requirements and the potential difficulty in securing a loan without it. This misrepresents the mandatory nature of PMI in low deposit scenarios and could lead the buyer to believe they have more flexibility than they actually do, potentially causing them to miss out on the property or incur unexpected costs. A further incorrect approach is to focus solely on the fact that PMI allows the buyer to purchase with a lower deposit, without adequately explaining that this benefit comes at a significant additional cost, and that the PMI premium is primarily for the lender's protection. This creates a misleading impression of the overall financial advantage to the buyer, and fails to uphold the agent's duty to provide a balanced and accurate picture of the transaction's financial aspects. Professional reasoning. Professionals should adopt a client-centric approach, prioritizing clear, accurate, and complete disclosure. When dealing with financial instruments like PMI, which directly impact a buyer's costs and borrowing capacity, agents must go beyond superficial explanations. They should proactively identify potential areas of misunderstanding or financial risk for the client, and provide information that empowers the client to make informed decisions. This includes advising clients to seek independent professional advice when necessary, such as from a mortgage broker or financial planner, to ensure all aspects of the transaction are thoroughly understood. Adherence to the Real Estate and Business Agents Act 1994 SA and its ethical guidelines is paramount in maintaining professional integrity and protecting client interests. Question 18. The investigation demonstrates that a licensed real estate agent in South Australia, acting as a sole agent for a vendor, has a close personal friendship with a potential buyer who has expressed interest in the property. What is the most appropriate course of action for the agent to uphold their professional and ethical obligations under South Australian law? Option A. Immediately inform the vendor in writing about the personal relationship with the potential buyer and seek their explicit consent to continue representing them. Option B. Advise the potential buyer on strategies to make their offer more appealing to the vendor, leveraging the personal relationship to facilitate a quicker sale. Option C. Proceed with facilitating the transaction, assuming the personal friendship will not influence professional judgment, and only disclose if the vendor specifically asks about any buyer relationships. Option D. Inform the vendor verbally about the friendship, but proceed with the transaction without a written record, believing that a verbal assurance is sufficient. The correct answer is A. Immediately inform the vendor in writing about the personal relationship with the potential buyer and seek their explicit consent to continue representing them. Explanation. The investigation demonstrates a common yet complex scenario in South Australian real estate brokerage, where a licensee must navigate potential conflicts of interest arising from personal relationships and professional duties. The challenge lies in maintaining impartiality, transparency, and adherence to the Property Occupations Act 2014 (SA) and its associated regulations, particularly concerning disclosure and acting in the best interests of all parties. The licensee's personal connection to a potential buyer introduces a significant risk of bias, which could compromise their fiduciary duty to the vendor. The best approach involves immediate and full disclosure to the vendor. This means clearly informing the vendor in writing about the licensee's personal relationship with the potential buyer. This proactive transparency allows the vendor to make an informed decision about whether they wish to continue with the licensee's services or seek alternative representation. This aligns with the ethical obligations under the Property Occupations Act 2014 (SA) to act honestly and with integrity, and to avoid conflicts of interest or disclose them promptly. Specifically, Section 52 of the Act mandates that a property agent must not act in a way that is likely to compromise the interests of a client. Disclosure is the primary mechanism to mitigate such compromise. An incorrect approach would be to proceed with the transaction without informing the vendor about the personal relationship. This failure to disclose is a direct breach of the duty of honesty and integrity, and it creates a situation where the licensee's professional judgment is likely compromised, potentially leading to a breach of Section 52 of the Property Occupations Act 2014 (SA). The vendor is deprived of the opportunity to assess the potential for bias and make an informed choice about their representation. Another incorrect approach is to inform the vendor verbally but not in writing. A verbal disclosure is a step towards transparency. The Property Occupations Act 2014 (SA) and standard professional practice emphasize written records for significant disclosures. This lack of a written record makes it difficult to prove that adequate disclosure occurred, leaving both the licensee and the vendor vulnerable. It fails to provide the robust evidence of transparency required to satisfy regulatory expectations and protect against future disputes. Finally, an incorrect approach would be to advise the potential buyer on how to make an offer that might be more attractive to the vendor, even if the licensee is acting for the vendor. This action directly contravenes the duty to act in the best interests of the vendor, as it prioritizes the buyer's interests, especially when influenced by a personal relationship. This behavior is a clear violation of the licensee's fiduciary obligations and the spirit of Section 52 of the Property Occupations Act 2014 (SA). Professionals should adopt a decision-making process that prioritizes transparency and client welfare. When a potential conflict of interest arises due to personal relationships, the immediate step is to identify the conflict. The next step is to consult the relevant legislation and professional codes of conduct. The paramount consideration should always be the client's best interests and their right to informed consent. Therefore, prompt, clear, and written disclosure to the client, allowing them to make an informed decision, is the cornerstone of ethical practice in such situations. Question 19. Assessment of how a real estate agent in South Australia should define and explain the importance of real estate to a prospective client, considering the legal, economic, and social dimensions of property ownership. Option A. Define real estate solely as the physical land and existing buildings, focusing on its current market value and potential for capital appreciation. Option B. Define real estate as simply the land itself, disregarding any structures or associated legal rights, and highlight its importance primarily as a source of raw materials. Option C. Define real estate as the physical land and any permanent structures, along with all associated legal rights, interests, and benefits that are transferable, and explain its importance as a significant asset class, a driver of economic activity, and a fundamental need for shelter and commerce. Option D. Define real estate as any property that can be bought or sold, emphasizing its speculative potential and the speed of transactions. The correct answer is C. Define real estate as the physical land and any permanent structures, along with all associated legal rights, interests, and benefits that are transferable, and explain its importance as a significant asset class, a driver of economic activity, and a fundamental need for shelter and commerce. Explanation. Scenario analysis. This scenario is professionally challenging because it requires a real estate agent in South Australia to navigate the nuanced definition of real estate beyond just land and buildings, and to understand its broader economic and social importance. Misinterpreting this definition can lead to misrepresentation, failure to disclose relevant information, and ultimately, breaches of professional conduct and consumer protection laws in South Australia. Careful judgment is required to ensure all aspects of the definition are considered in client advice and property marketing. Correct approach analysis. The best professional practice involves defining real estate comprehensively, encompassing not only the physical land and any permanent structures upon it, but also the associated rights, interests, and benefits that are legally recognized and transferable. This includes understanding that real estate in South Australia is governed by legislation like the Real Property Act 1886 SA and the Land and Business, Sale and Conveyancing Act 1994 SA, refers to immovable property and the bundle of rights associated with its ownership and use. The importance lies in its role as a significant asset class, a source of wealth, a fundamental need for shelter and commerce, and a driver of economic activity. This comprehensive understanding ensures accurate advice to clients, proper valuation, and compliant marketing practices, aligning with the ethical obligations of agents to act with honesty and integrity, as expected under the Estate Agents Act 1980 SA, and the professional standards set by bodies like the South Australian Property and Stock Agents Board, SAPSA. Incorrect approaches analysis. One incorrect approach is to narrowly define real estate solely as the physical land and any existing buildings. This fails to acknowledge the legal and economic dimensions of property ownership, such as easements, covenants, mineral rights, or potential development approvals, which are integral to the value and utility of the property. This limited view can lead to incomplete property descriptions and advice, potentially misleading buyers and sellers, and contravening the duty of disclosure required under South Australian consumer law. Another incorrect approach is to focus exclusively on the market value of the property, without considering its broader economic and social significance. While market value is crucial, the importance of real estate also extends to its contribution to local economies, its role in providing housing, and its impact on community development. An agent who only considers the transactional aspect risks overlooking opportunities to advise clients on the wider implications of their property decisions, potentially failing to meet their fiduciary duty to act in their client's best interests by providing holistic advice. A further incorrect approach is to treat real estate as merely a commodity for speculation, disregarding its fundamental role in providing shelter and security. This perspective can lead to aggressive sales tactics or a lack of empathy towards clients' personal circumstances, which is ethically unsound and can violate consumer protection principles. The importance of real estate as a fundamental human need and a cornerstone of community stability requires a more responsible and client-centric approach. Professional reasoning. Professionals should adopt a holistic approach to defining and understanding real estate. This involves 1. Understanding the legal definition. Familiarize yourself with South Australian legislation that defines land and property rights. 2. Considering economic and social context, recognize real estate's role as an asset and economic driver and a provider of essential services. 3. Prioritizing client interests. Always act in the best interests of the client, providing comprehensive and accurate advice that considers all relevant aspects of the property. 4. Maintaining ethical standards. Uphold the highest standards of honesty, integrity, and transparency in all dealings, as mandated by professional bodies and legislation. Question 20. Stakeholder feedback indicates a need for a robust valuation of a residential property located in Adelaide, South Australia, for potential sale. The property is a standard detached dwelling in a well-established suburban area. Initial analysis has produced three distinct valuation figures, one based on a discounted cash flow of projected rental income, another on the cost to replace the property, and a third derived from recent sales of similar properties in the immediate neighborhood. Which approach provides the most reliable and defensible market value estimate for this property under South Australian regulations and industry best practices? Option A, a comparative market analysis, CMA, that prioritizes recent, comparable sales data from the immediate vicinity of the subject property in Adelaide. Option B, a cost approach based on the replacement cost of the building minus depreciation plus the land value. Option C, a discounted cash flow DCF analysis based on projected future rental income and a generic discount rate. Option D, an average of the figures derived from a DCF analysis, a cost approach, and a comparative market analysis without specific weighting. The correct answer is A, a comparative market analysis, CMA, that prioritizes recent, comparable sales data from the immediate vicinity of the subject property in Adelaide. Explanation: scenario analysis. This scenario presents a common challenge in real estate investment analysis, where multiple valuation methods yield different results. Professionals must exercise careful judgment to select the most appropriate method, considering the specific characteristics of the property and the investment objectives, while adhering to South Australian SA, property law and ethical guidelines for valuers and agents. The challenge lies in reconciling differing financial outcomes and justifying the chosen approach to stakeholders, ensuring transparency and compliance. Correct approach analysis. The best professional practice involves utilizing a comparative market analysis, CMA, that is grounded in recent, comparable sales data within the immediate vicinity of the subject property in South Australia. This approach is correct because it directly reflects current market conditions and buyer behavior in the specific SA locality. The Property Law Act 1995, SA*, and the Real Estate Business and Agents Act 1994, SA*, along with industry standards set by bodies like the Australian Property Institute, API, emphasize the importance of using reliable, verifiable data that accurately represents the market value of similar properties. A CMA that prioritizes recent, like-for-like transactions in the same suburb provides the most defensible and accurate estimate of market value for a residential property. Incorrect approach is analysis. One incorrect approach is to rely solely on a discounted cash flow, DCF, analysis based on projected future rental income and a generic discount rate. While DCF is a valid valuation method for income-generating properties, its application to a standard residential property without a long-term lease agreement, especially when relying on speculative future income and a nonspecific discount rate, can be misleading. This method fails to adequately capture the immediate market realities and the specific nuances of the SA residential market, potentially leading to an over- or undervaluation. It also bypasses the core requirement of reflecting current market sentiment as mandated by SA regulations for property appraisals. Another incorrect approach is to use a cost approach based on the replacement cost of the building minus depreciation, plus the land value. This method is generally more suitable for unique properties, new constructions, or insurance valuations, rather than for determining the market value of an established residential property in a developed SA suburb. It does not account for market demand, buyer preferences, or the specific competitive landscape, which are critical factors in SA real estate transactions. Over-reliance on this method ignores the fundamental principle of market value as determined by what a willing buyer would pay and a willing seller would accept in the current SA market. A further incorrect approach is to average the results from multiple disparate valuation methods without a clear justification for weighting each method. Simply averaging a DCF, a cost approach, and a CMA without a critical assessment of their applicability and reliability for the specific SA property type and market context is a flawed methodology. This approach lacks the analytical rigor required by SA professional standards, which demand a reasoned selection and application of valuation techniques, not a mechanical averaging of potentially irrelevant or unreliable figures. It fails to demonstrate a deep understanding of the local SA market dynamics and the strengths and weaknesses of each valuation method. Professional reasoning. Professionals should adopt a systematic approach to valuation. First, understand the purpose of the valuation and the specific characteristics of the property. Second, identify the most appropriate valuation methodologies for the property type and market context within South Australia. Third, gather robust and relevant data, prioritizing recent and comparable transactions for a CMA. Fourth, apply the chosen methodologies rigorously, critically assessing the inputs and assumptions. Fifth, reconcile the results from different methods, providing a clear rationale for the final valuation, ensuring it aligns with the principles of market value and complies with the Property Law Act 1995, SA*, and the Real Estate Business and Agents Act 1994, SA*. Transparency and defensibility are paramount.